It's May 2019 here at Henssler Financial, and we found 3 important things to focus on in the market this month. Number 1, earnings season. We're about halfway through first quarter earnings season, which despite the market making new all-time highs, has been unimpressive thus far. According to Bloomberg, companies have grown sales by an average of 3.71%, roughly in line with expectations, while earnings have grown just 2.13%, albeit better than the first quarterly decline since 2016, which analysts had forecasted. Nonetheless, investors will be hoping to see stronger growth over the course of the next month as more companies report results. Number 2, first quarter US GDP. The US economy expanded at an annualized rate of 3.2% in the first quarter of 2019, well ahead of economists' expectations for just 2.3% growth. This is also ahead of the 2.2% growth experienced in the fourth quarter and the 2% growth in the first quarter of 2018 as well. A slower rate of consumer and business spending, which rose just 1.2% and 2.7% respectively, slipped and restrained growth a bit, but despite challenges including drawn-out trade discussions with China and a partial government shutdown, the U.S. economy appears to be chugging along. Number 3, the IMF cuts growth forecast. Despite the recent strong first quarter GDP report out of the U.S., global growth kicked off 2019 at a weaker pace than expected, according to the International Monetary Fund. The IMF cut its forecast for 2019 global economic growth to just 3.3% from a prior estimate of 3.5% in January and 3.7% in October. The IMF cited trade tensions with China, declining business confidence, and policy uncertainty across global economies. World trade grew at a 3.8% clip in 2018, and estimates are for just 3.4% growth this year. Trade was clearly decelerating in the IMF's quarterly forecast released in January. The new data represented an additional downgrade of 0.6 percentage points for trade growth. And that's been your Market Minute for the month of May. Thanks for listening.